Call this meeting of the Standing Senate Committee on Banking, Trade, and Commerce to order. Today we begin our consideration of Bill 377, an act to amend the Income Tax Act, requirements for labor organizations, which was referred to this committee on Tuesday, May the 7th, 2013. Colleagues, before we begin, I would like to outline some ground rules for our upcoming hearings as decided unanimously by your steering committee. First, we have an extensive list of witnesses, but rest assured, we will have no more than 4 per panel. And second, you'll be delighted to know that starting tomorrow and continuing for the duration of our study, the committee will meet for 3 hours on Thursdays, starting at 10:30 a.m. To begin our consideration of Bill 377, I am pleased to welcome Mr. Russ Hiebert, MP, who will be joining us for the first hour today. Mr. Hiebert is the Member of Parliament for South Surrey, White Rock, Cloverdale, British Columbia, and is the sponsor of Bill 377. First elected in 2004, Mr. Hiebert serves as co-chair of the All-Party Parliamentary Border Caucus and as chair of the Canadian branch of the Commonwealth Parliamentary Association. I would remind colleagues, which I suspect they do not need any reminding, that our committee is known for its tightly crafted questions without lengthy preambles. Mr. Hiebert, the floor is yours.
Thank you, Mr. Chair, honorable senators. Thank you for the opportunity to speak before you on my private member's bill C-377, requiring public financial disclosure by labor organizations. My motivation for bringing forward legislation in the area of transparency is based on similar actions by our Conservative government. Among the legislation we've introduced as a government, including the Federal Accountability Act, are bills requiring greater transparency for public office holders, for Crown corporations, and most recently for Native reserves, legislation that this chamber also passed. Now, labor organizations play a valuable role in Canadian society, and we provide substantial benefits to support the work that they do. However, many people are surprised to learn that despite the massive federal public benefits for labor organizations and their members provided under the Income Tax Act, there is currently no requirement to be accountable to the public for the use of those benefits. Under the Income Tax Act, labor organizations operate tax-free, and their members receive full income tax deductibility for their dues payments and receive their strike pay tax-free. Dues deductibility alone costs the federal treasury in the range of $500 million a year. The fundamental premise behind C-377 is that the public is providing a substantial benefit, and they should know how that benefit is being used. After all, charities, which also receive substantial benefits from the public, have been publicly reporting on their finances for the past 36 years now. And as I looked around at our largest trading partner, the United States, I found that public financial disclosure for labor organizations has been a fact of life there since 1959. In fact, Canadian labor organizations headquartered in the United States, such as the United Steelworkers of Canada, report very similar financial details to what I am asking for in C-377. So, right now, you can go online to the U.S. Department of Labor website and find out exactly what the head of the Steelworkers of Canada earns and how he splits his time between political activities and labor relations activities. You can also see how much his union donated to various political parties in Canada. Public financial disclosure is also the case in the United Kingdom, France, Germany, and Australia. Before this bill came to this chamber, I proposed some amendments that were accepted by the House of Commons and are contained in the bill you have before you. First, there are amendments that address the issue of privacy. In particular, my amendments eliminated any uncertainty about the fact that pension plans, health benefit plans, and other regulated plans will not be required to report benefit payments to individuals from such registered plans. Home addresses have also been removed from the reporting requirements. Additionally, union employees earning less than $100,000 will not be identified unless they are in a position of authority. The $100,000 reporting requirement reflects similar legislation that has long existed in Canada, such as the province of Ontario's 1996 Sunshine legislation for the provincial public service. The second major change was in the area of cost savings to government. Significant cost savings will be achieved through the amendments, removing the requirement that searches of the disclosure data be subject to cross-referencing, and by requiring that all filings be electronic, eliminating paper filings. Indeed, the Canada Revenue Agency has confirmed that they believe there will be fewer than 1,000 entities reporting, and the estimated startup costs of implementing Bill C-377 will be $1.2 million per year for the first 2 years and just $800,000 annually after that. A third area of change that my amendments will foster is in what will be reported. There are two significant changes here. The first is that less will be required to be reported by a labor organization's core labor relations activities. Instead of providing details of spending over $5,000 on such activities as organizing or collective bargaining, an aggregate figure only will need to be reported. Second, for transactions where there is a potential for conflict of interest, a so-called related party transaction, there will be full reporting on the details of those transactions. An example of a related party transaction might be when a labor organization buys a parcel of land from one of its directors. Bill C-377 does not comment on the appropriateness of such a transaction. It merely requires that it be reported. And I believe that everyone will agree that full transparency is called for when it comes to related party transactions. Now, I've followed the debate of honorable senators and as they have considered my bill at second reading, and I would like to take make a few comments for your consideration. The question was raised whether other organizations that receive similar tax benefits to labor organizations, such as professional associations, should also be included in C-377. In general, yes, it is reasonable to apply the same principal demand for transparency to other organizations receiving similar public benefits. However, C-377 was specifically written to focus on the specific activities that labor organizations uniquely engage in, such as collective bargaining, labor relations activities, and so on. It would be up to another MP or senator to introduce a bill requiring public financial disclosure by professional associations. Another comment was made during second reading suggesting that under C-377, the Canada Revenue Agency would be empowered to police how labor organizations spend their money and become the political judge of what expenses are appropriate. This is categorically incorrect. Bill C-377 does not regulate in any way how labor organizations spend their money. C-377 does not even require labor organizations to spend money on having an audit. The sole requirement in the bill is the filing of an information return, no more than is already required of businesses, nonprofits, charities, or even individual Canadians. One speaker at second reading asked why C-377 doesn't apply to a list of organizations such as Rotary clubs, religious congregations, and the Fraser Institute. In fact, as I mentioned earlier, Canadian charities, including Rotary clubs, churches, and the Fraser Institute, have been reporting their financials publicly for the past 36 years. A senator indicated that Canadian trade union legislation was originally modeled after British statutes. He said, "Our laws were designed to protect legitimate union rights and should do so now." In fact, I'm quite glad that the point was raised because Britain is currently ahead of Canada when it comes to labor organization public financial disclosure. Under legislation passed in 1992 in the UK, unions are required to submit annual reports and maintain financial records for subsequent inspection if required, for a period of 6 years. The British legislation requires the disclosure of the salaries and expenses of elected officials of a union. A British union's annual financial reports must be audited and are public records available for general viewing. The suggestion was made at another time that, quote, a 2-year supply of coffee, a used car, a new computer system or printer, or the replacement of plumbing or a boiler at a union headquarters would qualify for explicit disclosure, end quote. In fact, the $5,000 disclosure threshold does not apply to the core functions of a labor organization. If the funds expended for the specific items mentioned were for administration, overhead, labor relations activities, etc., then only an aggregate figure would be supplied for all spending in those categories, and no information about the coffee supplier or others would be disclosed at all. The point was also raised, and I'm sure you'll hear it again, that many Canadian labor organizations already disclose financial statements to their members. While this may be the case, it is simply not the purpose of C-377 to require disclosure to organized members. Bill C-377's purpose is to require public disclosure because of the substantial public benefits that labor organizations receive. Several of those opposed to C-377 have suggested there is a constitutional question of jurisdiction, as, in their view, C-377 is labor law and not tax law. In fact, C-377 amends the Income Tax Act and not any labor code. C-377 does not attempt to regulate labor organizations in any way, compel them to spend money, or dictate how they may spend their money. The only activity required by C-377 is the filing of an information return, an activity already required of many other types of institutions, including organizations regulated exclusively by the provinces, such as provincially chartered nonprofits. The constitutionality of the federal government requiring a Canadian organization that receives revenues to file a financial information return is not in doubt. C-377 has already been reviewed for constitutionality by the House of Commons and deemed not unconstitutional by an all-party committee, with the Liberals being represented by former leader Stéphane Dion. The bill was also reviewed for constitutionality by the Attorney General for Canada, the top legal officer of the Crown, before he recommended that the government support the bill. I have also heard some concern raised that solicitor-client privilege is not well enough protected in this bill. First, even if the term was not mentioned, it would be addressed by our common law. However, to offer greater clarity, I have included it in a key place in the bill as an exclusion under legal services. One group has suggested the exclusion should appear under other clauses as well. The simple answer is, if a lawyer is giving legal advice, those are legal services, regardless of what other category of activity it may have been provided under, and they are expressly protected in C-377. However, if a lawyer is lobbying for a labor organization, for example, that is not a legal service. Hence, no need to mention solicitor-client privilege in that category of lobbying. Finally, one senator actually alleged, and I quote, an anti-union bias running rampant in C-377. While such rhetoric may make for good political theater, it is not supported by the facts. According to the 2011 Nanos Labor Day survey, 83% of working Canadians and fully 86% of unionized Canadians support public financial disclosure for labor organizations. That is solid support from the grassroots. In conclusion, while a handful of labor leaders and their political friends may be uncomfortable with the idea of public disclosure right now, in time, the public will see that the large majority of Canadian labor organizations are using their resources wisely and efficiently. And, as this fact becomes apparent, a positive image of labor organizations as fiscally responsible will be enhanced, just as happened when charities became more accountable 36 years ago. Thank you for your attention, and I'm pleased to answer your questions.
Thank you very much, Mr. Hiebert, for your opening comments. I'm going to move immediately to my list of senators' questions, starting with Senator Green, who will be followed by Senator Massicotte.
That's great. Thank you very much for your bill and your presentation. I like your bill very much, and it's good to know that we're catching up with our trading partners. I have a very simple question. In your view, what are the benefits of your legislation to the average union worker?
Well, the benefits extend beyond the average union
Sure.
worker. They extend to the general public. Remember, the purpose of the bill is to extend public disclosure to a group of institutions that receive substantial public benefits. So, just like charities have had to disclose for 36 years, and when that happened, Canadians had more confidence that the money that they were giving to charities was being used properly. I believe the same level of confidence will accrue to labor organizations when Canadians know that they too are using this money wisely, efficiently, and effectively. So the benefit is broad, much beyond members of a labor organization.
Sure. No, I appreciate that, but I'm just wondering from the average a union member point of view, will it give them a better avenue to learn what their union is up to?
Well, like the public, members of a labor organization might have an interest in how their dues are being spent, and would have the opportunity, if they so desired, to have an influence on the leaders that make those decisions about how that spending is occurring. I've heard from a variety of Canadians, both unionized and non-unionized, over the last 2 years that I've been working on this piece of legislation, that they're very curious to know how their dues are being spent, and very much applaud this kind of transparency. And so if that's any reflection, then I think that could also apply to many other Canadians.
Sure. Great. Thank you.
Thank you, Senator Green. Senator Massicotte, to be followed by Senator Nancy Ruth.
Thank you, Chair. Thank you, Mr. Hiebert, for being with us. I understand the grasp of your argument being that these people, these organizations receive some tax benefits from the fact they're not taxable, and therefore they owe the public more information. In your mind, though, how does that compare to, say, a corporation? Let's stay with a private corporation. Obviously, he pays taxes, but I presume the legislators, when they decided to give tax-free status to charitable organizations or unions, there would have been significant other benefits that they deemed necessary. So how does the reporting compare to, say, what you're proposing to what a private corporation with maybe 500 employees, how does that compare?
Well, you can't really compare those institutions because they're completely different. First of all, labor organizations receive substantial public benefits from a variety of reasons that I just mentioned. Tax deductibility of dues, they operate tax-free, and strike pay is tax-free. Corporations don't have those same benefits. It's much like charities receive tax credits for the donations that Canadians give to them. That substantial public benefit is there because we want to support charities. But the obligation that goes along with that financial public support is transparency and accountability. You don't have the same thing with corporations. It's not a fair analogy.
But I presume corporations are paying taxes because somebody decided that they get benefits from society. But let me go through the next part. How does your disclosure compare to, say, a public corporation, to, say, Bank of Montreal or Royal Bank, which has thousands of employees and probably has, and they get significant protection from our Canadian government relative to percentage of shares that can be owned by third parties, by foreigners, including many strategic assets in Canada. How does that reporting compare to, say, what you're proposing?
Again, it wasn't my interest to compare to public or private corporations because those are completely separate institutions that don't receive the kinds of financial public benefits that charities do or that labor organizations do. They're completely different institutions. So it's not really, it's like apples and oranges. It's not fair to compare them. But the principle is still there. In terms of a public corporation, the shareholders of that corporation have an interest in the public, or in the public company, and so they get disclosure. It increases their confidence in their investment. I think the same analogy applies to Canadian labor organizations.
How does that?
Canadians both unionized and non-unionized, feel that their investment in these labor organizations, to the tune of about $500 million a year, is reciprocated with accountability and transparency. Their confidence as well will increase.
I certainly acknowledge with public companies, the trust is and the transparency is phenomenal. I mean, we're talking billions and billions of dollars. And yet, I guess my question, in that circumstance, to maintain that trust and merit that trust, how does their public disclosure compare to, say, what you're proposing?
Again, I didn't compare between a labor organization and a public or private company. There are different levels of transparency required. In this case, what I've done is I've tried to very closely mirror what some Canadian labor organizations already have to disclose, not to any Canadian authority, but to the U.S. Department of Labor. And I've tried to make it parallel so that we don't have this different playing field here in Canada, with some labor organizations having to disclose this information to the U.S. Department of Justice, but other labor organizations having to disclose nothing at all. That's the level playing field that I've tried to create with this legislation.
Then just go on to the more detailed. I've been a CEO of a private company and a public company. The reporting requirement you're proposing is immensely much more significant and much more detailed than even public companies have to provide. But let me go on to the next question. You said in your presentation, I think I heard you say that read the disclosure of any transaction excess of any particular supplier, let's say, or employee or whatever, in excess of $5,000, that requirement would only apply to the portion of what I call union work. Is that, did I hear you correctly?
That's correct. So for any core labor relations activities, bargaining, organizing, labor relations, those are core union activities or labor relation activities. That information will be disclosed in aggregate. One big number at the end of the year. No detail required. But where a labor organization gets involved in things like lobbying or political activity, then that $5,000 threshold comes into play. Because that's not a core labor relations activity.
If that's the case, we can all read it differently. I can read it in French, but let me try the English version for you. When I read paragraph section 3B of I guess it's 149.01, and I go to 3, the information return referred to in subsection 2 shall include, and I jump to B. It said a set of statements for the fiscal year setting out the aggregate amount of all transaction, all disbursements. Then you get a line. Then it goes on to say, with all transactions and all disbursements, the cumulative value of which of a particular payer or payee shall be $5,000. But with a separate entry along with the name of the payor and payors, setting out the nature of each transaction. It does not say, at least my reading of it, but maybe there's an amendment that I'm not aware of, in the heading, neither in the amendment does it say that this is only for the what I call union work. It seems to be explicit for any disbursement cumulative for 1 year to any payor or payee.
Okay, if you scroll down to the bottom, below that section, Roman numeral 9, for example, it says a statement with an aggregate amount of disbursements on labor relations activities. If you continue down to Roman numeral 13, a statement with the aggregate amount of disbursements on administration.
Yeah, but go
Number
back.
14,
Okay, let me go.
aggregate on general overhead.
I agree with you, but let's go back to where the introduction of all those numbers are.
Yeah.
It says, or that is to be paid to receipt, and including. It doesn't say that the following basically satisfies the previous description, and including. Including means, it says over and above.
Big net.
And when you say, for instance, like, give you examples on number 5, statement of accounts payable, does that mean they must give an itemized account of every accounts payable?
No, it's a statements of accounts payable.
But have you ever seen a statement of accounts payable? I've seen thousands of them. It's probably a 50-page document which lists every creditor, including and basically what he owes each one. Now, why would the public be interested in that? And that, I would argue, is quite confidential, including a lot of contractors doing business with these people. They don't want to see their name disclosed that they got paid $5,322 for this kind of work. I mean, the competitor's going to take that information. It's not for the public interest.
Senator Massicotte, I'm going to intervene
Okay.
and put you down for round 2. Very good questions. Senator Nancy Ruth to be followed by Senator Ringett.
Mr. Hiebert, you said in your introductory remarks that Britain had been ahead of Canada since 1992. And as I understood, and this is what I'm checking if I understood correctly, you said that they must report if they're required to do so. And that is not a mandatory requirement to report, it's only when asked to report. Is that correct in the British legislation?
Let me just be clear on what I did say. Under legislation passed in 1992 in the UK, unions are required to submit annual reports and maintain financial records for inspection for up to 6 years. It also requires disclosure of the salaries and expenses of elected officials of a union, and these annual reports must be audited and their public records available for general viewing.
There was nothing in there that they must report if required.
No, it's not optional.
All right, thank you.
Thank you. Senator Ringett, to be followed by Senator Malte.
Thank you, Chair. Mr. Hiebert, I'm pleased that you're here today. However, I'm somewhat surprised with Member of Parliament for 9 years who has a law degree that, first of all, you said that that unions give donation to political party, which is against Election Act. You also indicated that it's the same as charities on one part, and then after, when Senator Massicat further questioned you, you said, well, no, you can't compare apples and oranges. But basically, what I'm very surprised is that the fundamental law of the land, the Constitution, is not abided by in this legislation. This is not a tax act. This is a Labor Relations Act. It's clear, very clear. I have spoken with many constitutional experts, and they are all in agreement. So, Mr. Hiebert, which constitutional expert did you contact or talk to that says that this bill is constitutional and that it also respects the Canadian Charter of Rights and Freedom?
Thank you for the question, Ms. Ringett. First of all, to clarify, Senator Ringett, to clarify, you said that I said that that unions donated to political parties. Well, in fact, if you look up the United Steelworkers of Canada on the U.S. Department of Labor website, as I did, you will see that this Canadian labor organization did in fact donate to political parties in Canada. They happen to be provincial, but they are political parties. In terms of charities and apples to oranges, what I was referring to was this comparison between labor organizations and public or private companies. That's the comparison that I was making, and it's not one that is comparable, and that's why I use that analogy. Regarding the constitutionality of the bill, first of all, as I mentioned in my opening remarks, I consulted the House of Commons lawyers. The standing committee within the House of Commons, it's a subset of the PROC committee, has 4 criteria to permit a private member's bill to proceed to the House. One of them is whether or not it is unconstitutional, and that all-party committee, which included in this case the former Liberal leader Stéphane Dion, assessed the bill and said it was not unconstitutional. In addition to that, the Attorney General of Canada, who's the highest legal officer in Canada, recommended that the government support the bill and could not have done so if it was not deemed to be within the bounds of the Constitution.
Could you table
In
all
addition
these,
to that,
could you table
so
all these
far-
written documents to the committee, please, through the clerk, so that all the members will have a
The-
copy of that?
Well, I'm not privy to to documents that are circulated in cabinet, which is what I was referring to when I refer to the Attorney General of Canada. The documents provided, there's no documents referenced.
Written documents that you've received yourself?
No, I'm answering the question in terms of the subcommittee of PROC, submits, tables a report in the chamber of the House deeming a private member's bill acceptable, and that fulfills the criteria. To this point, no constitutional expert, to my knowledge, has cited any court decision, any statute, or any specific section of the Charter that would suggest that C-377 is unconstitutional.